Hey guys, just looking at Microstrategy and the way they're doing stuff to finance their purchase of Bitcoin is they're taking on a bunch of debt in the way of notes and issuing out of preferred shares. But on that preferred share note and the interest they're paying on probably the notes too, they're paying roughly $807 million in annual cash obligations. Now, what they've done to try to cover that is they have a US dollar reserve of $2.25 billion. Problem with that, with the interest and dividend payments that they have to pay on the preferred stock and the notes, that's going to cover about 21 months. Now, their legacy software doesn't generate that kind of income on a yearly basis to cover all that debt that they have to repay. So there's the risk in that. Now, a lot of their notes are going to be converted basically by 2027 to 2028. That's billions of dollars in convertible notes. So these are like ticking time bombs, basically. There's certain stipulations in the contracts, even on their later date notes that don't expire to 2030, that the holders of these notes can redeem in 2027 and in 2028. So keep that in mind. Currently, their price per Bitcoin, their cost per Bitcoin that they hold is at the 75,000 mark. So basically, if Bitcoin was to fall below 75K, that could create this liquidation event, basically, where the convertible part of the debt becomes worthless to investors. They'll stop wanting the stock and start demanding cash redemptions instead, which could force a sell of MicroStrategy's Bitcoin holdings at a loss because their cost is 75. So the mark to look at, generally speaking, is 75,000 for Bitcoin. You don't want to see that fall below that point. You actually want to see it go up naturally. So looking at also the fact that a local index, or actually a global index, not local, had threatened to delist MicroStrategy. If that had happened, there would have been 11.6 billion in passive outflows. That was the estimate from JP Morgan. If that had happened, it would significantly create a liquidation event, dropping the price of both Bitcoin and MicroStrategy egregiously. Now, if we look at the timetables, the 2027 notes, 1 billion in principal amount is maturing February 2027, basically. I think those were redeemed already because I think the put date on those was 2025. So 2028 notes, there's 1 billion principal amount with investors able to demand cash back late 2027. 2030 notes, 2 billion in principal amount, matures March 1st, 2028. 2029 notes, 3 billion in principal amount, mature in June, although the exact year isn't specified. Now, what I've seen differently is that most of this is coming due between 2027 and 2028. They could actually redeem the money earlier because there's like a put contract placed on there where basically the holders of the notes can actually ask for their cash back. So there's a ticking time bomb in the way of what's coming forward for MicroStrategy regarding the redemption of all these notes. Now they can redeem for shares too, or to do a share dilution basically, but they're diluting shareholders. And if that happens, they could drop the price of MicroStrategy significantly also. So keep that in mind. Anyway, guys, just some cautionary about approaching MicroStrategy as an investment vehicle. There are some ticking time bombs waiting as far as their debt, the way they've taken out so much debt in the way of notes and preferred stock that they issue, and the way they actually have to maintain that payment at a cost to them of $807 million a year, and their legacy software is not generating anywhere close to that type of income. All right, guys, take care. Bye.